look back at the wild PE and PP markets of Q2 and what we see going forward. For those of you that are new here, we are Resintel, the market intelligence wing of the Plastic Exchange. We offer daily and weekly spot prices along with commentary and analysis wrapped into one all-encompassing platform. We have subscription plans starting at just $2.49 per month. And at the end of this presentation, we will give a quick demo of the platform and our service. If you're interested, you can sign up for a free 10-day trial at resintel.com or reach us at sales@resintel.com. I'm Dominick Russo, author of our daily Resin Pulse report and longtime resin trader. I'm joined again by Michael Greenberg, our CEO and writer of our weekly Resin Sites. Hello, Michael.
Hello, Dom. Nice to see you here. Thank you to everybody for joining us. Some of you were here on our last webinar or two, and some of you are new. So we're happy to see so many people here once again. Thank you very, very much.
Absolutely. And feel free to ask questions with the platform along the way, and we will hopefully get to them. Michael, at the start of last quarter's webinar, we said that if we had had the presentation a week earlier, it would have looked much different. And I think this time around, we're in the same position. So why don't we get started and kind of look at what April looked like and kind of start from there with polyethylene.
Yeah, going back to this last comment, it's pretty wild. In early April, the polyethylene and polypropylene markets were just on a tear, just sprinting higher and higher and higher. There were estimates, all due to the Iran war, the closure of the straits and the disruption of shipments and destruction of many petrochemical plants in the area. And it seemed that this was going to be like the biggest supply shock our industry has ever seen. Some said it was just going to dwarf really what happened in the Great Freeze of 2021. And yeah, leading right into our last webinar, which was April 15th, we felt a change. April, the market's kind of stalled right around April 7th, and we noted a peak on April 13th. And we felt a change. The market had just kind of like lost some of its momentum, and exports, which were supposed to just all-time records, they just kind of stopped happening. The market,
and that peak kind of did coincide with sort of the ceasefire that came into effect right in the beginning of April. And I think for the whole second quarter, we saw that kind of coming and going, whether that was going to hold or not. But I think that was part of the catalyst that began this, along with what you're beginning to mention.
Yeah, and the spot market peaked right in the beginning, really like the middle of April. But the contract market had a long way to go still. April contracts had to be increases were going to be implemented in May, with a huge May increase still on the table. But the spot market, it forecasts subtle changes in the spot market, really forecast changes and what could lie ahead. We've been trading polyethylene and polypropylene for more than 25 years. We carry inventory. We do a lot of back-to-backs. We import when necessary, but rare. We're large exporters. We export more than we transact domestic. And while the market seemed like it was still going higher and higher, we actually, I think our last inventory purchase, or our last, which was small, was on April 4th. It was a couple of rail cars. The market, it was a surprise. It was a surprise. Just kind of like as a quick recap too, first quarter polyethylene contracts were up a nickel, and it was largely because the producers, U.S. producers, had gone through a major effort during the fourth quarter to rebalance supply demand, and they crushed prices and margins along the way in order to achieve it. And they were set out to regain pricing power at the beginning of the year, and they did. So they added a nickel during Q1, and we had actually given a webinar right before the war had started, and we were bullish. We were not wildly bullish, but we felt that there was some more momentum to the upside. But we also felt that there was a lot of excess capacity, and there was capacity that was coming on in China. And if the market were to really get ahead of itself, U.S. producers and Chinese producers would increase operating rates because there was capacity that was offline and more capacity coming online. So we felt like 2026 was probably going to see a number of cycles, and we've already have, but the magnitude of the rallies that would happen would be reduced, and the duration would also be reduced.
Right.
Now, this is because there was a lot of capacity offline and that could come back. Now, we didn't anticipate a major war happening, a major destruction all over the place, but we were directionally positioned for that and advising towards it. But as soon as it started to happen, we were like all through March was just buy, and telling our customers to buy. I saw the possibility for operating rates to increase and for supply to come to kind of like put in to satisfy demand, but I didn't expect it coming from China to the extent that it did. And I don't know anybody who did, and anybody who could go back and claim that they saw it and they predicted it, and China was going to come and crush this market, during April, May, and through much of June. I'm sorry, I don't believe it. I think we deal with with major producers and pretty much all the major international traders, all the major exporters. And nobody saw it. And,
I think coming into the first leg of this, it would, China was one of the regions, China, Asia, that would be very short material because of everything that was coming offline. So as they started to re-export resin from the US and ramping up their own production with a slower domestic market of their own, they sort of put a stop to the resin move higher in April. Yeah.
So do just a quick recap. We're up a nickel during Q1, right? And then March was, during January, February, we're up a nickel. In March, contracts were up a dime. April was up 30 cents, and there was 20 cents on the table for May. The April 30-cent increase got implemented, and contracts peaked up 45 cents for the year. May was nominated plus 20, but ultimately was flat. And June saw a 15 cent a pound decrease, leaving contracts through Q2, the first half of the year, up 30 cents for the year. Spot, as I just mentioned, spot polyethylene prices, they peaked really around April 13th, but between April 7th and April 13th, they really had peaked. And the gains for the year were anywhere between 36.5 and 46.5 cents. And they averaged 39.5 cents, the gains. So the spot market did. And maybe it could have been a little bit more, but maybe it could have gone a little bit more, but the spot market reacted very, obviously the spot price reacted very quickly, but the spot market also peaked. It peaked kind of early, and we felt it, and we saw it peaking, and others might have seen it peak a little bit later. But we were pretty much we saw the full extent of the top by April 13th.
I think this was a unique move that it was very quick. Very fast. It wasn't a kind of step higher. like we maybe seen during the COVID market. It was a very quick 30-day, 45-day climb, right? It took a little while for contracts to kind of catch up to that.
Yeah, I think that the North American polyethylene producers, they kind of learned a lesson from 2021 during that extreme market where the spot market just absolutely took off. I mean, went up to over $1, over $1 very. It took some time, but contracts contract increases were a lot slower, and the polyethylene producers this time said, hey, look, if this thing's going to go nuts, we want to capture as much of it as we can, as quickly as we can.
Right.
And yeah, they started to say they really jammed it to the North American market. This was a circumstance where the U.S. market, U.S. supply did not have an issue. The Middle East had an issue. Yeah. Asia had feedstock shortages at first. They had an issue, but the U.S. didn't have an issue. And now, as the dust is settling back, polyethylene prices, contract domestic polyethylene prices, are kind of the highest in the world. And it's not a problem that the U.S. had, but it's still a residual result of these market conditions. The market peaked for like what really happened in here, and China stole the spotlight, and as we look back, I'll recognize it as an incredible market share shift. The Middle East lost sales. I mean, they weren't able to ship, they weren't able to produce a lot, and they know where to put it, and they weren't able to ship. And I think most players, us included, thought that, and positively the U.S. polyethylene producers thought that the North American supply was going to be the place that would satisfy the world shortages. And U.S. producers cranked up their reactors and their operating rates and made as much as they possibly could, and felt that the world was going to come to the U.S. for polyethylene. And it started like that. It sure did. And China was a buyer too. It sure started like that, and that helped make the whole market, jump, some 40 cents a pound, at least spot, through mid-April. But really what happened, and one of the things that spooked us the most about this market was watching just record amounts of ethane, of NGLs, get shipped over to China, where the Middle East, where Middle East NGLs and LPGs were restricted. The U.S. came to the rescue of China and exported just a tremendous amount of ethane. And that ethane was used for their crackers to make ethylene, to make polyethylene. And they cranked it up. So the U.S. should have seen all-time record exports. I mean, the largest exports on record were 3.16 billion pounds in December 2024. But PE exports during Q2 averaged 2.33 billion pounds. I mean, it could have been 3.2 billion pounds, 3.3 billion pounds. It should have been all-time records. But instead, the average was 2.6 billion pounds over the previous 12 months. And exports during a time with that we all thought the world was going to come to the U.S. for supply, exports actually dropped 274 million pounds below the 12-month average.
And just a little plug here. We're using our Resintel platform to kind of show some of the charts along with Michael's commentary. And this one, Michael, kind of shows what you're really speaking about. This is percentage of sales that were exported, right? So we can see late 2025, we're well above 50%. And as we're talking about the Chinese resin supply kind of floods into the market, we're dropping down into like the 42% range in May, right? And that's really corresponding with the negative price action.
Hey, Dom, could you put up the, so this is PE export percentage. Could you please put up the PE export volumes?
Yeah, absolutely.
12 months and maybe 24 months just to see kind of where we've been. And, the reason why we're so strong on exports here in this commentary and on China, China was the cause of the lack of exports from the U.S. And they were not anticipated by the producers or by most traders because polyethylene production during Q2 averaged 5.63 billion pounds, which was 130 million pounds per month more than the trailing 12-month average of 5.5 billion. So producers ran hard. They ran really hard and thought it was going to go export, and it didn't. You want to...
Well, you want it just 1 year?
Yeah, let's give it a year.
Okay.
Yeah, so during a time when we should have seen record exports actually came off, and during the same time, the producers ran pretty much as hard as they could. They had huge margins. Ethylene prices had rallied, but they're largely integrated anyway. But it was the polyethylene price that really took off, and production managers at the polyethylene producers, it's hard to look at massive margins in the anticipation for record exports and sales and not want to produce as much as you can. But I kind of question maybe by May, I think that May was a mistake. Producers continue to run really, and they ran less in June, but they still ran hard in June. But by May, they should have noticed, hey, these exports aren't happening. We're building a lot of inventory. We better slow our production. But they didn't. Margins were still really, really strong, and it's hard to shut down capacity, or reduce production when you're looking at, at 30, 40, 50 cent margins. They're like, I want to produce as much as we can. Well, they didn't get their sales, and total sales during Q2 were 5.2. Polyethylene sales were 5.29 billion pounds. That's 135 million pounds less than the trailing 12-month average total sales. So, exports were expected to be all-time records. They weren't. Exports were disappointing. Domestic sales were good. Domestic sales were very good. And in a way, why not? Markets were prices were taken off, and a lot of contracts were still on. Contract increases were, in March and in April got intense, but March were mild, and the spot price was well above it, and you had tremendous domestic demand. And during Q2, you ended up with domestic sales of about 140 million pounds a month more than the trailing 12-month average. So that left polyethylene processors with pretty ample inventories, and they got to slow down their purchases dramatically during June as prices were starting to come off. But the takeaway, when all the dust settled, this is it. That's what we're leading up to. There was a massive 920 million pound inventory build during the second quarter. And once again, that should have been an inventory drawdown.
Yeah, on paper leading up to this, you would have thought that inventories would be drawn way down.
Yeah, there were pretty good inventories on hand, to begin with. I mean, they were relatively light, but they were ample, and the producers could have just reduced inventories and sold off inventories if massive exports were to happen. But once again, they didn't, and it was a big surprise. So I'd say that well, what did China do and why did they do it? There are a lot of new plants that are coming online, and part of their strategy initially was to become self-sufficient in polyethylene production, where they wanted to be able to satisfy their domestic demand and not rely on the international supply and international markets in case there are disruptions or they have to become price takers at times that they don't want to be. So, the first initiative was really to build enough capacity where they could satisfy domestic demand. But online now.
Michael, I think we lost you here. Michael, are you back? All right, 1 second, folks, while Michael rejoins us here.
Am I back? Am I back?
You're back.
I'm going to turn off my camera. Everybody knows what I look like at this point. I reduce the bandwidth draw, and there we go. So we're talking a little bit about China and say, well, why are they doing this, right? Why would China just kick the heck out of this market? I think that they saw it as an opportunity to gain market share.
Right.
The price was up, and it allowed them to use their strategic oil supplies at the refineries to produce ethylene. It was cost effective at the kind of prices that were in the market, 80, 90 cents. It made refinery ethylene very cost effective. It made their coal to olefins cost effective. And the U.S. came to the rescue and exported an absolute record amount of ethane, which made for very, very cheap feedstock for their crackers and for their polyethylene reactors. I will note that that ethane imports into China, they actually peaked I believe in March, which is something that, like I said, that kind of shook us a little bit when we saw how big their ethane imports were, and that it was going to be their feedstock that was going to hit this market, and it did. I'd say that China, kind of putting the top to the market premature, breaking it hard, was much to the dismay of polyethylene producers, North American in particular, who should have been the biggest benefits of this. But for processors around the world that don't want 90-cent resin, this was fantastic. It's like, thank you, China.
Right.
We have a crazy rally and such a such a shock. And fine, we need resin. We're going to pay what we have to, but look, it's going to be hard for us to pass this through downstream. Can we deal with it for a short term? Yeah, because we have to. But ultimately, 50 cents polyethylene is a lot better for the processors of the world and for the consumers than it is 90-cent polyethylene for the polyethylene producers. So polyethylene producers didn't like it so much, but hey, this was great for processors, and maybe Chinese polyethylene producers didn't mind knocking the margins from their competitors along the way. Look to be a long-term player, not such a bad thing for them to hurt their competitors a bit along the way.
Yeah, and as we wrote about as it was happening, international buyers really dropped their bids to the U.S. Right? I mean, they were a big part of the run up. Export prices had really kind of caught up to domestic spot prices in a way during March, right? But then as their bids started to fall and their buying activity shifted away from the U.S. to other supply regions, as you spoke about earlier, really left too much material being made here and needed some homes, right? So then we start to see prices really, spot prices really start to fall apart through May and June.
And just to talk about a little bit of a magnitude, when I say like Chinese exports really took off, they were up in April. They were up 479% year over year.
Yeah.
April exports were 164% above March exports. So this wasn't just like, okay, let's sell a few pounds. Let's take advantage of a higher price. They came out and just flooded the market. And it's questionable. And you say, well, why did they do it? I mean, they could have dropped the price of nickel and gotten the order, but they dropped it 15 cents, another 15 cents after that. And the thing busted hard. And when the market busted hard, as soon as the market really started to come off, a lot of the European buyers that were driving this rally, driving demand, it took a step back. They say, hey, if this thing is going to be toppy, maybe we should, we built some inventories as they built here in the U.S. and built in Brazil. General Latin America, they built because they're buying heavily. Maybe we should slow down. And as soon as market sentiment turned, it was just it was back to the market started. The market started feeling soon.
Did we lose you again, Michael?
All right. Well, maybe that's a signal that I'm talking too much, huh?
Yeah. So we know prices raced up, right, and started coming off. And over the last, why don't we kind of shift really quickly to what's happening now, right, and what are we looking at going forward? So through May and June, prices really unwound, and the export market a lot faster than the domestic market did. But as we kind of transitioned into July and really the last week, right, we felt a shift in sentiment. I think it began last week. The fighting had kind of ramped up again, but I think for the most part, the resin markets had kind of moved past what was going on in Iran, right?
Yeah. China during like the first to the middle part of June, Chinese offers kind of stopped, and and China turned buyer again. They had liquidated a lot of their inventories that they had. Their ethane imports had dropped, and they started working through higher priced crude oil that they had been importing during the initial run up, and they kind of slowed down, and they took the pressure off the market, and like I said, turned buyer, while the U.S. producers had built up so much inventory, and China was actually there and actually became big buyer and had started scooping up a lot of inventory that got dumped. And that might come back to the market. That might come back to the market as re-export in August and September, although a lot of it seems to be more designated for their domestic demand and usage. But we'll see. Another issue that happened that we started seeing in June is there was like an anticipation that freight rates were going to come off, and they might, but they haven't. And freight rates out of China, like contract freight rates are a lot cheaper, but spot freight rates to a lot of regions are $5,000 to $6,000, and you're adding another 10, 12 cents a pound to the resin price. So as the price came way down, and there's a lot of resin that got exported that started with a 3 during June.
To select companies with very large volumes.
Yeah, very select. Yeah, 100 rail car kind of deals. Yeah, and it was designated China only. This is not out to the whole market, and it was an effort to just like move inventory and just get it off the books. So yes, the market started to shift a little bit in early July, but as we've noted, the polyethylene price is up on average 16 cents a pound right now. It was up about 40. Contracts went up 45. Spot really, some spot was up as much as 46 cents, but averaged up about 40. But now we're averaging up around 16. Some it's still up 19 or 20. So the U.S. producers are going to do their best to hold on to as much of their margin as long as they can. And yes, the market sentiment is shifting again right now. About a week ago, started shifting, but the U.S. contract market is owed a decrease. And maybe like if the market wasn't starting to feel some sentiment shift in here, and I do think a bottom is in place, by the way. I say that another 15 cents could come out of the market, but maybe we'll see what happens over the next 10, 12 days. Maybe it'll be a nickel to 10 cents. Maybe the producers are going to give some more benefit back, relief back to their customers, but I'm sorry to feel it's not going to be another 15 cents. Maybe a nickel, maybe 10 cents. We'll see. But they are owed a decrease even before the market catches a new leg higher. So where Dominick started off this this webinar saying that, like, similar to our last one, like if we were to have this 10 days ago, look, the markets was still kind of in free fall, and but we noticed a change. We stopped selling very, very aggressively. Look, we sold, so we're trading very actively, but we turned buyer. We turned buyer about a week ago. We had really drawn our market making trading part of the business. We had really drawn our inventories down really low during that rally, and continued to sell through through mid-June. Really more interested in liquidating inventories than price. Getting down on volumes, and that put us in a position like, wow, price is really low. We're a lot closer to a bottom than we are to a top. There's not a lot of downside risk anymore. We did a good job moving inventory. I think it's time to start putting it back on. And
I mean, if you're a spot resin buyer, right, in May and June, would you have had a real reason to load up, right? Yeah, you really didn't.
No.
And we documented it, heavily, that the market was going to keep coming off, kind of in search of a bottom. But last week, there was a bit of a change, right? So, I think producers started signaling that they were kind of done, telling buyers we're sold out. And I think a lot of buyers had really just been on the sidelines, right? They hadn't necessarily been buying much on the way down. Some of them bluffing the market lower. But then when as some value started to really kind of be shown, it was sort of a race now to get some pounds at these lower numbers over the last 7 days or so.
Yeah, and I want to point out that it coincides with the conflict restarting, and that has a lot to do with it. But it more coincides with the end of the second quarter. The end of the second quarter and the end of the year are the two biggest times where a down market could reverse. You generally have a long break, between Christmas and New Year's, and you have the July 4th holiday. You often come back to work, on July 6th. The producers did what they had to do. They did some liquidations, although, it doesn't really look like it, because they built once again. But the way the market is feeling, they were done dumping the market at the end of June. And so the selling pressure was off. The Chinese pressure on the market was off by mid-June. The U.S. producers were kind of done dumping their inventories also by the end of June. And the market started feeling like, okay, look, if it, just like when it reached the top, if the market's not going to go any higher, maybe the market's going to come off. And now if once it reaches a level, same thing on the downside. Now that the market had sprinted lower, and seems like it's going to stop. Well, this is the time. This is how bottoms are made, and those guys that Dom were just mentioning, a lot of the industry, a lot of the international market, just driving the market down every day, every couple of days, coming in and feeling out, dealers and exporters for price and dropping their bids a couple of pennies, a couple of pennies each day. They weren't buyers. And you got like this fear of missing out. Did I miss the bottom? Is it still cheap enough? Okay, so if I pay a couple of pennies higher, it's still a really good price. And I think that's kind of where we are right now, where the guys.
And there was some market share that was won back with some cheaper prices that were saw, right? So, so the really dropping prices in June helped set up, getting some of that export market back and setting up, I don't want to say the market is necessarily tight, right? I think the term sold out gets thrown out a bit more. They're not really sold out of resin, but they're willing to say no at least, right?
Or they're sold out at that price. They don't want to do that price anymore.
Right.
Come back to me in a few days, when you realize that price isn't happening anymore, and here's a new number if you want to buy some cars. And
and so we saw our first uptick in spot prices really since the beginning of May, earlier this week. So to kind of wrap up PE, because we still need to talk about PP. What are you feeling Q3 could look like, right? I mean, now there's a little bit of a bid to the market.
Well, what's also changed? Like, this is a year that normally the market likes to come off in April, May, right? And then in June, you start to see processors and traders, distributors, exporters, resellers, all of us, this whole group, middle market. We all buy during June because there's some inventory buffer, June and early July, an inventory buffer in case, for the hurricane season. But this is not a hurricane season. I mean, it's technically hurricane season, but it's forecasted to be, we got big weather pattern shifts, and the Pacific side is much more active than the Atlantic. And I don't think anybody is scared of hurricane disruptions, massive disruptions in the Gulf this year. Now, the biggest market shocks come when something comes that you don't expect. So I'm not going to say that we won't get a hurricane, we won't get a massive disruption in production out of the US. I'm not going to say that's impossible, but it's not forecast. And because it's not forecast, and you didn't really have an issue, a little bit of an issue last year, but you really didn't have much of an issue the last couple of years, people are a little bit more complacent and did not come to build in June. So some of the seasonality is pushed off a little bit. And so, now we're in July, we're at relatively cheap prices again, at least in spot on contract. And yeah, what do we see ahead? I think it's kind of like how I felt at the end of February, or the end of January, end of February. Like, yeah, I think the market's it's got some upside in here. It's got the downside momentum is gone. The upside is feeling like there's some upside in here. Do I expect a huge rally ahead? No, I don't. Same like I was feeling before. I don't expect a huge, but I expect some relief rally in here. I think the prices got a little bit overdone to the downside, and I think there's some upside in here. And unless something comes to shock us, look, and it's very possible. Look, and what else is different in the Iran situation right now in the oil market? The oil market jumped, $12 really quick, the last, several trading days, and it hasn't given it back. Right? The last few times we spiked higher, gave it back quickly. When we entered the first part of the Iran war, a lot of, we jumped up to 119, crude did. Some saw that, and then we averaged mostly down, 100-ish, 90s, 100-ish. And most thought that, hey, look, if this thing really continues, we got $150, maybe $200. You listen to some of these pundits. And it didn't happen. And why did it not happen? Because there were a lot of strategic reserves, and the U.S. lowered their strategic reserves, reduced them, and sold a lot of inventories. And EIA overall inventories, lowest levels in 46 years, although we had an increase last week, in the last 2 weeks. China came in with huge crude reserves, and they sold off hundreds of millions of barrels. And they kind of held the market from getting out of hand. Once again, China didn't want to see $150 oil, and China didn't want to see, $1.20 polyethylene. It's not good for their economy either. So a lot of the, supply came out of inventory to hold the crude market. Now inventory has been reduced. And I think that the market is a little bit more susceptible. If you have another huge, big issue that is sustained, I think that some of the inventory buffers on the crude side it's not like it was back in March and April. So I think that the market is a little bit more nervous for that at this point. Just want to bring that up.
Yeah. So overall, just to kind of wrap it up, we're feeling the market firming a little bit, that there really is kind of a bottom put in place from this kind of steep drop right now. We think we'll continue to see some firming, and there's some room for prices to move a little bit higher, but we're not really expecting to retest any sort of highs to where the market was at, unless there's some new information that's brought in. But we do think there also will be some further contract price reduction as they catch up a little bit.
We should see a decrease in July. Maybe they'll make it small and give a little bit more in August. Depends on what happens in the spot market. Yes, spot market is going to come up a little bit in here. Contract market's going to come down.
Yep, and don't quite think it'll wipe out all of the gains made in Q2.
But that's also this. If you go back to Q3 of last year and Q4. Polyethylene prices were deeply depressed. The market is dealing with expansions and with overcapacity, and margins were crushed. A lot of polyethylene producers in North America were having a real hard time. Not just North America, worldwide, we're having a real hard time. Margins were all crushed. Prices were very, very low, a lot lower than they are now, and people were worried about further capacity shutdowns in South Asia. and in Europe, and this point. So as the markets is recoiling from this whole massive Iran war supply shock throughout the supply chain, we do need to look ahead and say, really in the mid to long term, what's going to happen in here? Are the U.S. producers who were enjoying 2.6 billion pounds average exports, exports are down. Exports, they've lost a few 100 million pounds of exports per month to China. Are they going to concede? Are they going to concede more of the export market, the international market, to China? Is China just going to be a permanent exporter, a heavy exporter of resin? Are they going to be a long time market share shift benefit from the Middle East and the U.S.? Or is the U.S. and the Middle East, are they going to go fight for it? And if they fight for it, we're going to see depressed prices, and they're going to go compete for it. At some point, who's the low man on margin? If the U.S. continues to feed China with our natural resource cost benefit ethane, you've shifted the margin from polyethylene, big margins in polyethylene in the U.S. producers, to cheap ethane margins that they're making by sending NGLs off to China. If that's going to continue, is the whole strategy of the U.S. has the cheapest feedstock in the world, we're going to be the exporters of polyethylene to the world? Are we conceding that? This happened fast. This shocked the producers. It surprised them. And what's their long-term strategy? Are we going to slow our exports of ethane? They're not the same players. They're not the polyethylene producers, not exporting ethane. Are the ethane guys going to continue exporting heavily? Are U.S. producers going to reduce their operating rates and say that we want to focus more on the domestic market? But hey, they built all this capacity over the since 2017 for exports, but now China's in the game. So last 3Q and 3 and 4Q, the market was looking like the industry was looking long term like very low margins, very low price. And now, after this whole cycle has occurred, let's kind of remember a little bit what we were feeling in 3 and 4Q of last year. Maybe we're going to have to revisit that scenario on a midterm. So let's remember that we're back to where we were in 3 and 4Q with overcapacity up at hand.
Right.
Okay, enough of polyethylene.
Okay.
We got
On to PP.
So real fast, polyethylene contracts, right? During January, February, they were up 6 cents. In March, everything was fully correlated to PGP until the last couple of months. PGP gained 2 cents in January, 4 cents in February. March, PGP jumped a dime to 46.5. April was up 12.5 to 59, where it peaked. May PGP down 7 to 52, and June PGP settled down 8.5 to 43.5. Okay. PGP during the April-May period, really March, April, May, U.S. polypropylene producers earned an average of 6 cents a pound of margin expansion. And some got a little bit more. We seem to be gravitating more towards a net of 6 cents. And, the question will be, are they going to be able to hold on to their margin expansion, or are they going to start to have it whittled away? Some of those that were above 6 cents seem to have been whittled away a little bit. I would view this Iran war situation as a lost opportunity for polypropylene producers to gain a long-term foothold on the international sales. U.S. polypropylene exports have never really averaged more than 4 or 5%. Weren't overly competitive. China is a lower cost producer of polypropylene. This was an opportunity to gain some new customers. They didn't really do it. PGP prices ran up too fast. Our costs went up really fast, and margin expansion was huge in the spot market, and it just killed export opportunities. How did the polypropylene producers react during all of this? Well, Q2 polypropylene production averaged 1.613 billion pounds. That's 76 million pounds a month more than the trailing 12-month average of 1.54 billion pounds. Domestic sales were very good, especially early on in March and April. They were very, very good. They averaged 1.527 billion pounds, which is 76 million pounds a month, which is substantial for polypropylene, more than the trailing 12-month average. And a lot of that was inventory build, get ahead of this. A lot of polypropylene contracts are still on prior month PGP, so they had all the time in the world to buy during March and April. Even though spot was up, contracts were cheaper. They built. Now that it's starting to come off, polypropylene went up. PGP and polypropylene prices went up too much, too fast, killed demand, lost the export opportunity, and then operating rates dropped substantially, and PGP prices fell dramatically, and they dropped all the way down to 35 cents by June 15th, I believe was the low. Even after a 15.5 cent 2-month decrease, May, June, it looked like we're heading into July with another decrease at hand. But Dow has a turnaround on their PDH, and Enterprise has had production issues, outages at their PDH number 2, and all of a sudden, nobody wanted PGP at 37, 38 cents, 10 days ago. And the market hit 40, 41 on Friday, and the market hit 45 on Monday, 46, 47 cents yesterday. All of a sudden, the market's up 12 cents from its low, up a quick dime from 10 days ago. And polypropylene trends. It trends. PGP trends. Polypropylene buyers tend to chase markets higher. And as they chase the market and demand increases, producers see it as feel the demand. They buy more PGP. The market's correlated to PGP. The more demand there is for PGP, the higher the price goes, the more feeling that that prices are going to continue going higher, and polypropylene buyers continue to buy. And that creates like a self-fulfilling prophecy to the upside. As soon as the market tops and busts, demand for polypropylene drops. The producers feel it. They reduce their demand for PGP. PGP prices fall. The market once again has a self-fulfilling prophecy to the downside. And it's not until, sure, of course, there's buying on the way up, there's buying on the way down, but the big buying on the way down doesn't necessarily come right near the bottom. It comes right after the bottom. It comes after like real FOMO happens, fear of missing out, really happens. Says, did I miss this? Well, let me go. It's cheap. It's good. We're back to really good prices again. If the market's going to go reverse and trend higher, this is time for me to start buying again. This last little rally in PGP is not necessarily demand driven. I mean, it's supply driven. Overall, PGP supplies are ample, can satisfy, but in the very short term, there's a shock to supply, and the market ran up very, very quickly. And where I say that this is not really demand driven so much, okay, because domestic polypropylene buyers, their inventories are ample. Upstream producer inventories, they're ample, right? There's a lot of, when you have two PDHs that are down, and it's affecting a lot of producers, they all compete for spot PGP, which is driving the price higher. Because they've got, even though they have inventories, they have to produce, and they've got orders, and there's certain grades that need to be produced, and the planning the forecasting and planning has all been done, and to continue. So
and right now,
along with this, did the polypropylene?
Yeah, I was just going to say right now with where spot PGP in July has raced up to 47 cents a pound. in the last, yesterday really. So the average closing price of June spot PGP was 38.5, and right now for July we're sitting at almost 41 for just the spot closing price average, right? So right now, with where things sit, PGP contracts are kind of poised for a July raise.
You've gone from anticipated July small decrease, into a modest. The market's pointing to a modest increase at this point. And once again, that's enough for a sentiment shift. Just like we're seeing a sentiment shift in polyethylene, we're feeling a sentiment shift in polypropylene. Both of them. In both markets, we're not anticipating a massive rally, but I think we're back to a point that says the markets are probably not going down. I mean, much in here. I think that has come off a lot. I think that there's value. I'm comfortable buying substantial inventory to restock a lot that we have let go. We actually entered the war just somewhat coincidentally. I told you we're bullish with kind of like record company inventories, and we drew down more than 50%. We always have to have a base, just like the U.S. producers have to have a base. We have resin coming in and out every day. But we drew it down about 50%, which is about as low as we could comfortably draw down our inventories. That was done by early June. And in the last 7 to 10 days, I think we've added back and brought our inventories back up to around a 75% level. So we've bought back around almost half of our inventory drawdown to what I would say is, it's not neutral. Yeah, maybe it's more towards a neutral position, but it's certainly not, I want to be as light as possible. But I'll tell you also, during all of March, we held at March was a record trading month for us, record volumes, but we held our inventories through March, through March. And April was a very, very heavy inventory selling month, as was May. And by June, we really reduced a lot of our inventories already by the beginning of June, but didn't do much buying until just in the last 7 to 10 days, 7 days mostly. So I'm not saying that we're always right. Did we call a top of the market on April 13th? Sure. Did we call maybe a bottom of the market here? Just as 2Q started, I think July 3rd or 4th, and we had our first actual uptick in prices. I think we posted it yesterday, our first actual uptick yesterday, the day before. These are cycles, and we feel them, and the spot market feels it. And once again, I don't think that this market is going to absolutely take off to the upside, but I do feel that we have a cycle shift in here. And we'll see what happens, but I don't see anything crazy to the market. But I do think that we're going to pick up a little bit in here.
Yeah, so kind of similar to polyethylene. The slide is seemingly contained for now, but we're feeling some firmness. I have a good chart I wanted to show on margins.
As you're looking at that, I'm going to give a little pitch to Dominick. He writes a daily report on the market, on the polyethylene propylene market. Fundamentals, supply chain pricing, ethylene, propylene pricing, resin pricing every day, with commentary on what's affecting the market. And he's been right on. I think we've been very on the market. And if someone who's reading his commentary, they were buyers all the way through March. They stopped buying. It became more hand to mouth, and then we're like big into inventory reduction. And now, read his commentary. We're feeling an uptick, and we're buyers again. We're not always right, but we're in the 90s. We're pretty good because the spot market is very subtle. We feel it, and Dominick is very good at putting out his info. So those that follow him, I think, have done extremely well during this this whole 1 and 2Q cycle. I think that there's upside ahead. He generates like 250 reports a year. I do about 50, so that's like 300 reports, and I think we charge like $3,000 to get the report. That's like $10 a report. $10. That's like a penny and a half in a rail car, one rail car. If you followed his stuff, my stuff's okay too. If you follow our, you have protected your margins and made a relative fortune compared to what we charge for this information. So there's my little pitch. Dominick works tremendously hard, and I think he's been right on the market, and he's worth following, guys. Okay,
thank you. So why don't we get to some questions to kind of wrap this up? We're right at about an hour, and then anybody who wants to stick around for kind of more of a demo of our system, you're welcome to. I know many of you are already subscribers or have seen it in the last webinar, so please feel free to stick around. We won't keep you too long, but let's kind of answer some of these questions that I saw coming in. We kind of answered the Q3 pricing question. We see things kind of firming right now. Contracts coming down for polyethylene. I think PGP contracts are kind of poised to go up in July.
Something to watch out for the year. We talk about like the European market, something that you need to watch out for. Potentially a problem with the Houthis in the Red Sea.
You're jumping to the European question.
Well, a little bit to the European question, but that also goes into overall Q3 sentiment in here. Something to watch for. Iran and their offensive defensive side of things. They know how much influence and how susceptible the world markets are to a closure of the Straits of Hormuz. Well, Europe is extremely sensitive to product coming through through the Red Sea. So if they do some bad things over there and close that, I think that Europe is going to have a bit of a problem. Good for the U.S. selling into Europe, but not so good for the Middle East or Asia selling into Europe. So I think that Europe, European buyers of resin need to keep an eye on that. And logistics issues coming out of China. Yeah, freight's expensive, and it's still, transit times are greatly lengthened, and I would just watch it in Europe. I think that Europe bought a lot early on. They became a little bit complacent. They enjoyed a lot of new Chinese sales that were at cheaper prices. But I think as the Chinese prices started to lift, and I think that we'll see a shift back into the U.S., their demand for U.S. material once again. Okay.
Yeah, and I mean, I think there also is some other factors at play too. Terms out of China are not very favorable. Most of the time, it's cash in advance. And I think we saw and have seen some European buyers kind of getting back involved in U.S. supply as sort of a more comfortable place to buy resin for the time being. So, overall, I think we've talked about it a lot. Europe faces some challenges from a resin buying perspective. Do you want to touch on that really quickly, Michael? Maybe some assets being shut down in Europe and.
Well, the high prices that came in the early, during Q2, that gave a little bit of that supported.
Yeah.
Some time. Exactly. There you are. It bought time in Europe and it bought time in Southeast Asia. So maybe they'll stick around a little bit longer.
Okay, another question. Curious on your outlook for PP asset rationalization in North America for the remainder of the decade. Are you expecting any plant closure announcements?
Well, so right now you got some production issues in polypropylene also. And one of them, which I think is interesting, then we'll get to that on the back end of it. Like Heartland is kind of having some issues right now. That doesn't affect the PGP market because their PGP is local, but it does affect polypropylene production and supply demand balance. So something to kind of watch for. There's 3 polypropylene issues right now, which is also kind of like lending to maybe a little bit of more borrowed time for polypropylene producers to hang on to that 6 cent a pound margin that they have. We'll see if they could permanently hold on to it or very, very long term. But for now, I think some of it's protected by both the run up in PGP due to PDA outages and some tightness in polypropylene production in general. Do I see some closures? Gosh, no, I don't.
Yeah.
I don't think so. I don't think it's really necessary. I think that we'll probably have ongoing GDP growth in North America. North America absorbs 95 to 96.5% of all polypropylene production. We're running in the 80s. Yeah, running in the 80s. We don't rely on the export market. It's possible that exports could start to happen again, but it seems like China is going to own that international market. Polypropylene, domestic polypropylene demand has been good, and I think
we talked about that yesterday. The buying. I mean, there's some debate on if some of the ACC sales are miscategorized or not, but domestic polypropylene buyers stayed steady through the last 4 months, really.
Above 1.5. I mean, even if you take 35 or 40 million pounds out of domestic sales that were probably, actually exported, maybe even a little bit more than that, you're still like a good 100 million pounds a month better than a lot of historics.
Yeah.
Some inventory build, but GDP catches up. You continue to do a couple of % a year over a period of some years. Yeah, you've got overall growth again.
When we look at the numbers on the chart here, we've with very high prices, right? We've been buying still very well. So I'm with you. I don't see necessarily a reason for a North American PP unit to shut down.
And if you were really be running a straight line average, I think you're $1.4 billion and change, a lot lower than where your line is, right? But this is good, and the market's been polypropylene feels pretty darn good, and we're back to a price level that is decently competitive. Like the market doesn't like being at neither polyethylene nor polypropylene likes being in the 80s or 90s, okay? But 40s, 50s, with polyethylene, 50s, 60s for polypropylene, we touch into the 70s. It's competitive. It's fine. Processors are making money. Producers are generally making money. I think that polypropylene feels better the last year than it had in the previous couple of years. Just has. I think that as long as PDHs are running pretty smoothly, you've got relatively inexpensive polypropylene, and it helps processors be competitive and profitable. We're at a higher price level, but I don't think that it's really outside of the comfort level. And once again, I feel pretty good about polypropylene demand.
Yeah, and I mean, you really did touch on it earlier in polyethylene. It kind of ranged true for polypropylene too. I mean, in 2020 and 2021, we saw, another 50% higher prices. So where we're going to settle after these kind of supply issues resolve, it's a pretty comfortable place, I think. Okay, so that's kind of wraps up any of the questions that we had. Appreciate everyone joining us. This kind of concludes the market talk part of this. We're going to shift now to showing off our platform for those of you that want to stay. If you can't stay, but you're still interested in it, you can reach out to us at sales@resintel.com, and we can schedule a demo to take you through it, or have a one-on-one call to your specific business and how a Resintel could be a good fit for you. Again, Michael kind of talked about it. We do post a daily report. So if this information is something that you are finding very useful and you'd like to have it as it's kind of happening, We post every evening a very casual market commentary on what's going on in the resin world, and then a more in-depth look at what happened in the week with Michael's weekly report. So,
okay. And as long as we're pitching a little bit, yes, we buy and sell a lot of resin every day. Polyethylene, polypropylene. Anybody ever needs spot supply? We're here for you. Truckloads, rail cars, absolutely. Participated in the spot market. Spot has generally been cheaper than contract over the last 25 years since I've been doing it. Some kind of a blend is good, but spot buyers have traditionally performed better than contract buyers. Yeah, there you go. That's my little pitch.
All right, I'm going to shift to starting a little demo of our platform. We'll keep it quick because we're already have you guys here for over an hour. But what I've been using for this presentation has mainly been our dashboards. So let me just share my screen again. So our dashboards, this comes with our gold platform, our gold subscription plan, excuse me. And these are fully customizable. We get you started with a series of them, but you can add any of the charts that you wish. You can add price tiles, price tables, and that's loaded with all of our daily resin prices that we post. We post 9 grades, different grades of polyethylene and polypropylene. We also have upstream prices loaded into here: ethane, propane, propylene, ethylene. We also have ACC data that you're able to chart along with resin prices. And that means going to include what we've been looking at: inventories, exports, export sales, domestic sales, production, things along that nature. So it's a full charting program that is in the dashboard. You can download these charts, move them around. You can run spreads against different data sets. You can have bar charts, line charts. You can chart on either axis. You can change all the labels. And really, you can have as many data sets in here as you wish. And it's really convenient. You can click off if you want to change what you're looking at while you're looking at a chart. And again, you can have spreads like we have here loaded in. You can run straight line averages, moving averages, all of those on our data sets all together. So a lot you can do here on the dashboard.
We use this data. We use these charts. We use this data. We look at correlations, and it helps us. We put that together with price. It helps us manage our inventory. And look, when we're buying, when we're selling, when we're liquidating, when we're adding, and not a backpatter so much, but we're pretty good at it. And this is the data that we use. Data and information and charts alone, they need some interpretation.
Right.
We do some monthly market intelligence calls with some resin producers, and we're happy to share our perspectives with them. We like talking market. We like participating in the market. We like talking market. We're very, very happy to hop on calls. They don't need to be this long. It can be 15, 20 minutes. It could be a half hour, an hour with our subscribers, and discuss what we're feeling in the market and what we think you could or should be doing with your with pricing and with your inventories. It's just part of our offering. We don't charge anything extra for it. We're happy to take these calls. And like I said, they could be very short. They could be 15 minutes just to touch base, or they can be extended if you want. But we're happy to help you guys, all of us.
Yep. So this is our dashboard. If you'd like, again, schedule a one-on-one demo, and we can dive deeper into all of the capabilities that this has. But I want to keep moving along for you guys. So as Michael said, one of the really important things is you can have all the data that you want, right? But some color and some commentary along with it really helps to kind of guide you. You have many important tasks in your day. Let us help take some of that off your plate. And we do that in a couple ways. We have our weekly resin sites, which Michael writes. He began writing in the year 2000. So many of you are familiar to this. Was sort of our free report that we were doing for a lot of years with the Plastic Exchange, except that was like a page or two. We've really expanded it, but with our silver package, you get a the flat PDF once a week. Usually comes out on Wednesday the following week, and it covers the action from the week before. So again, this is sort of taking the charts and putting color behind what you're seeing, taking that data and actually sort of giving you something actionable to work with. If you are someone that's gonna, you like what you're reading and you want to do some analysis on the fly, we have an interactive market update, which is part of our gold package. So you can read the text, Michael's text here, and then quickly, if you wanted to do some analysis of your own, while you're reading, you have these chart panels on either side, and you can change some of the data quickly to take a look at different views. And this report is the same text as in the flat PDF. It's just dynamic, so you're able to not have to fiddle around with different screens. It's all right here for you. Then, as Michael mentioned, thank you for the compliments. I write our daily resin pulse report, so it's a very casual, quick read at the end of each day, focusing on what's going on in the polyethylene and polypropylene markets, what is happening in the monomer markets. And then I like to throw in something else, like what's happening with the general U.S. economy, what's happening with global trade, what's happening with logistics. This is where if some news is kind of breaking during the day, like a plant going down or a price increase happening, we kind of talk about it in here. And so this is for those that are really looking to take advantage of shifting in markets, right? So earlier this week, or last week, we had written that things were kind of shifting, that we were starting to buy for our own inventories. These kind of insights we kind of bring to you here in the daily report. So this price panel here, this comes with the gold. This is the daily prices and the change in the markets that we track. You can also chart right out of this page. This text here comes with silver package. So with our silver package, you do still get a daily report. You're just not really getting the daily data or access to all of the data. And then you also have another chart down here that you can manipulate the different data sets in here. And this part of it is included in the gold. Both the weekly update and the daily, both of those are able to be downloaded in a PDF form. So if you like to print it off, keep it on your desk while you're talking to suppliers or carry it with you, you're able to do that. We also have a Resindex page. So our Resindex is what we call our daily pricing. So we keep daily markets in 9 different grades, and then we also track spot movements in the ethylene and propylene markets. As you can tell from our presentation,
For 25 years,
prices vary. What's that, Michael?
Daily prices for 25 years, and I'll tell you, never once have we done a non-market adjustment because our prices are evaluated every day. So
yep.
they're once you benchmark to our prices, you're feeling the real spot changes in the market.
Yep. And our charts, if you have a single data set charted, we have little annotations on what was happening in the market during that time that could have shifted the prices. And you can go ahead and take that date and then go read our back issues of any of our other reports to see what was happening. And then how markets reacted over the next couple months after that. Again, the weekly prices come with the silver plan, daily prices with our gold plan. We also have the resin industry map, which I kind of showed off. This is our North America. We're really North American focused in terms of updates, but we have, I would say, a good 95% of the different resin production sites in the world here. So, and with this, you can click on any of the bubbles and see what the what the capacity is at each plant. You can sort it by, what is relevant to you, and you can even click and see if there's any active incidents. So you click on these bubbles, you'll see what is going on at that plant. Again, this is part of the gold package. We've also created some different tools for anybody who's buying and selling resin. We created the system, as Michael said, for us to use. We're the biggest users of it. So we've got a freight estimator in here where you can estimate different locations from Houston to, let's say we're exporting to Buenos Aires. You can see the different lanes or the different options for freight. We also have a page where we're tracking price increase letters. We have a quote calculator page to help you quickly put together a quote for your customer, including all the different variables. So we really just built a platform that kind of puts it all in one place for you. We have currency conversion, unit conversions, all sorts of different tools loaded in here. Again, if you're looking for more of an in-depth look, we're happy to schedule a one-on-one demo with you. I think that pretty much wraps up our platform. Anything else, Michael, that I might have just brushed over kind of quickly?
Nope.
Okay. All right. Well, we appreciate everyone joining us today. Please reach out to us, Dominick at Resintel.com, if you have any questions or just want to ask about anything that's going on in the market. Michael at Resintel.com. We're here. We want to help. We want to start conversations and help you become a better buyer and navigate these markets.
Thank you.
Thank you.
See you next quarter. Bye.